Good morning. Welcome to Rick Helps Real Estate Show and happy Thursday. This week is ripping by for me, probably because I took a day off and went up to the hills. Um, got rain yesterday, but man, it was disappointing where the rain went. It was kind of mixed all day and it took a narrow path. I got an itch right here. And it went kind of up I-17 and the fires were on both sides and the rain went right between the fires. It was a period where it was hitting the big fire up by Sedona. So I'm hoping, and I hope to read this morning that they made some progress on that. Now we're supposed to get maybe a 10% chance of rain today, but not enough to dig us out of this fire. So let's hope we get some relief. And speaking of travel trailers, I'm finding all kinds of little things that I have to fix. You know that on the main toilet, you take a little white lever and you pull it and it fills it up with water. Well, that doesn't work. So you have to get this little valve from behind it. The only way you can get that valve to replace it is you have to remove the entire toilet, which isn't that hard. It's just two bolts. You lift the thing on, you take it out, turn it upside down, take that little valve out, and I rattled it. There's a little thing broken in there. Like, tick, 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 tick. Then I had to find that part and put it all together and put it back in. So I took advantage of the cool weather yesterday to work on the inside of that, and it works, and I feel very accomplished today. So how many homes are on the market right now? Well, there's 5,581, and an hour ago, there was 5,571. And that shows you that on Thursdays, they start adding on. So we'll be at probably 5,700 by the end of the day. And it's possible, again, that this Saturday will be up to 6,100. And it looks like this right now in the 7-day moving average. You can see that our homes under contract are relatively the same, and listings are starting to get a slight edge over homes on contract, but nothing too major or too telling yet. I am thinking of tracking price changes, but the problem with tracking price changes is it really doesn't tell you whether the price is going up or going down. 90% of the time, the prices are going down, and I believe that what we're going to see is we're not seeing a price reduction because the market is cooling. The price reductions that I'm noticing are because people are just coming in too hot. And I was reading some articles about Oregon, and Oregon was seeing the same thing. So Oregon was saying that they were seeing homes that were just way overpriced, and they had to come down to reality. Now, across the country, we are seeing some slowdowns. I got an article here. Even in new home sales, they're saying that new home sales hit a 12-month low despite higher inventory. Now, I always look at the headlines and then I like to drill in and say, well, give me the percentage, give me the numbers. Let's see what's really happening. And new home sales nationally dropped off for the second month in May, falling below an 800,000 unit pace for the first time in a year. So they're saying that people are kind of backing up. The inventory of available homes grew from 315,000 to 330 nationwide, bringing the available supply to 5.1 months at the current rate of sales. That's a pretty big supply. The supply in April was 4.6 months, and it was 5.4 months previous May. To put this into perspective, our supply on resale homes right now is 2 weeks. So they're saying nationally homes, there's a 5 to 6 month supply. That's actually a normal supply. If you see 5 months supply, that usually doesn't mean rising prices. They're going up against resale homes where there's like 1 month supply. So they're taking advantage of that tidal wave. So that's an interesting thing to watch. If we look at mortgage rates today, we actually got a little bit of relief. Today was 3.21%. Yesterday is 3.26. Ooh, whoopee. But going down, not up slightly. These are national surveys, national numbers. So any numbers that you're seeing from your lender may be different. And but that it still tells you the general direction, and that's a good thing. So yesterday, I got a question right as I was signing off, and the question was, are we getting outbid by all these Wall Street investors in the market? And the answer is, well, maybe, maybe not. Some parts of the country really are, places like BlackRock. And I got a couple articles that I'm going to point to here in a minute. But we're about 23% investor owned right now in the Valley, and that's been pretty constant for a long time. So that number hasn't spiked up. You'll remember that when we had the crisis in 2008, that there were a lot of homes that they didn't even know who the note holder was anymore because they bundled all these mortgages and sold them in mortgage-backed securities and packaged them and threw them at Lehman Brothers, and Lehman Brothers collapsed. People were able to stay in their home for a year without paying any mortgages because nobody even knew who owned the home. Well, investors came in and purchased up a lot of those homes in 2010, 11, and 12. A lot of these homes were destroyed. The renters, when they left, they took the copper, they took the air conditioning, they took the light fixtures. You know, the people just were not being reasonable at all. They were mad, so they were just taking what they could and throwing it in their truck, and off they went. So the average person couldn't go in and purchase a home and have enough capital to make the improvements to make the home habitable. So here comes the investors, and the investors come in, they scoop up and they repair these homes, and they did it in a large number in 2010, 11, and 12, and they're still holding on to them because the cash flow is so good. So is that adding to our inventory shortage? It actually isn't, mostly because the percentage of homes owned by investors hasn't changed. The fundamentals of why there's so much inventory is not really fueled because investors scooped up so many that there aren't any out there. It's primarily a demographic problem because millennials are out there in force. And as I showed you yesterday, the number of homes being built did not keep up with the population growth. And then you can mix in there that there's been some investor-owned properties. Now, there are some developments here that are called BTRs. They're called build to rent. So there are large Wall Street firms that are buying up these projects that some, like a builder like D.R. Horton, comes in and builds this build to rent community. So they made them as rentals. And after they get done building them out, and then they start putting renters in there, they sell the entire complex to people like BlackRock that are using them as investments. That doesn't really remove anything from the market because they were built to be rentals anyway in the first place. So they were built to try and satisfy a need because some people just can't get into a house right now. And these communities are kind of popular. You're tired of living in an apartment. You're tired of living in a condo. You'd like to have a house. You can't afford to buy a house. So how about renting a house in a little development? So they made these cool little developments that have parks and splash ponds and little back patios and stuff. And they're filling a need. But let's take a look at what's going on. When I look at the simple question, it says, Invesco backs mine to spend $5 billion on single family rentals. Why do these headlines make people so angry? Well, buying a house is not easy these days. Demand is outstripping supply in many areas of the country, seeing a scenario where people are bidding one against one another. So they're saying, well, now you got these Wall Street guys coming in and they're buying these homes and pricing you out. It's estimated as of 2019, there were around 300,000 single family home rentals operated by professional investors. That same year, there were more than 5.5 million houses sold in the United States. In 2018, there were 5 million homes sold. 2020 saw more than 6 million homes sell hands. So they're trying to put it into perspective here. We've got 300,000 homes owned by investors and 6 million homes changed hands. So more than half of the country's multifamily properties are owned by institutional investors, compared with an estimated ownership of 2 to 3% of single-family rentals, a gap that expects to narrow in time. What they're saying is most of the institutional investments are these large apartment complexes that you see. But Wall Street is also very interested in these communities that are rent-owned. They recognize that apartment living, people are trying to get away from that. So they're trying to get ahead of the curve. And when they have an opportunity to buy several, they'll buy them. They're not really going out and buying one here, one there. These large investment firms want to buy large tracts. There are some cities where it's getting a little out of control that I've read, and it's getting kind of interesting out there. There's an article here that says that BlackRock, corporations like BlackRock are buying up thousands of houses, pricing Americans out of the market. Says here, according to a recent report from Wall Street Journal, roughly 200 investment firms are buying up tens of thousands of homes and sometimes entire neighborhoods, raising prices and competing with middle-class Americans looking to take advantage of interest rates and buy their first home. I have not seen that here, but here's the article again that says, in January, D.C. Horton purchased an entire subdivision in Conroe, Texas. They built 124 homes and put the entire neighborhood on the block. What they're not saying here is those homes were built as BTRs, built to rent. So they never were going to go on as single-family purchases. After the crash, the government incentivized Wall Street to step in where individual home buyers were not. Well, they couldn't in 2011, 2012. So somebody had to come in and do that. And some of the world's largest hedge funds spent billions of dollars on almost 250,000 homes. In parts of Atlanta, they bought almost 90% of the 7,500 homes sold between January 2011 and June 2012. They bought them because they were in foreclosure, folks. Nobody else was buying them. The banks were holding them. So these numbers that you're seeing that were very large in 2011, 2012 were owned by the banks. Now, a lot of them are sitting back and they're waiting. They're waiting for us to end up being bank-owned properties again, waiting to pounce. So this article here says something along, it wasn't in this, the foreclosure moratorium on government-backed loans has virtually stopped foreclosure activity over the years, said Executive Vice President of Realty Track. So they're waiting. They're waiting in the wings. So is there going to be a lot of foreclosures? I doubt it, because I don't think if these investors are waiting to purchase a home and you exit forbearance, it's not going to be a foreclosure. The investment firms are probably going to come in and buy it, or the individual investors are going to come in and buy it. So I don't see a huge backlog of foreclosures coming because of that simple fact right there. So it's going to be an interesting time to watch. And the problem that you see here is here's a number of homes built by decade. So in the 1970s, and here we are in 2010s. So there just were not enough homes being built. So that's our issue and our problem. So the short answer to that question is, are investors scooping up too many homes? Maybe in some cities in the United States, depends on the area. We have not seen that here in Arizona. I know the Cromford Index, the Cromford report did address this about 3 months ago and said that the number was very, very tiny. And the number of investment homes that were owned is still rocking about 23%. Now, here's an interesting thing I thought I'd share with you. This is a nice new listing, came up in Ocotillo this morning, 1.299999 million. I don't know what, for $1 more, you can get it for 1.3 million. But they have this neat little water feature. Look at this, it comes out of the top of your patio here in the pool. And it's up against the water, and it's got some great views. But if the monsoons come, you better have your water turned off or you're going to have water everywhere. So I thought that was a beautiful looking property. It just came up 1.299999. So go ahead and offer them 1.3. Kick in the extra $1, will you? So tomorrow is Friday, and you know what we do on Fridays. We get with Pat and we talk about what's trending in the real estate business. There's been some slight changes out there in Fannie Mae and Freddie Mac, the agency that regulates mortgages. Supreme Court ruled that it should be tied more closely to the White House. They can't be operating as an independent agency like they think they should, and the White House should have the authority to replace them at will if they want. So the head of that agency is getting the boot, and they're going to put somebody else in. That's reasonable. Presidents should be allowed to make decisions on who they want to staff their large agencies, and the Supreme Court ruled and said that they can do that. So that's coming. But I'm wondering what kind of changes that they want or that they weren't seeing. So I'm going to do a little more reading on that and see if that's going to affect this or if it's going to feel anything on that change at all. Until then, have a fabulous Thursday. Take on the day and stay cool out there. See you tomorrow.